and from as high as 54% inflation rate in December of 2022, we are now talking about a single digit of 6.3% inflation. And in fact, nobody actually expected us to be here within this very short period. And that will be one of our focus here on Beyond the Numbers. We also take you through the 18% monetary policy rate, that big rate cut from the Bank of Ghana, 350 basis points, and as well finish the conversation or the analysis on the tangent of the current tariff, increment in both water and electricity. But we'll start with inflation because Winston Taki was live at the Ghana Statistical Service where the inflation figures were announced by the government statistician. He has all the details. We need to start from this national figure that you see. There is a lot of stories behind this national figure that you see on the smart wall. And Winston will take us through. Winston.
We began the year with a lot of expectation, projection by the IMF, the World Bank, all of them giving us figures that the end year inflation plus or minus 2, which is the central bank target for the year. And most importantly, new government in power, first year in the review, they are assessing what strategy will bring into place, especially from the policy direction from the central bank, especially the finance minister. So we're waiting for the first budget with some proposals that will reflect in the economic transformation. And we saw that happen in the first quarter of 2025, where we saw growth hinging up from 3.1% to 5%. Consistently to 6% in the first quarter of 2026. And that anticipation brought some new optimism into the market where we saw inflation coming down trajectory. The key factors was the ease of inflation drop. It was dropping by some point of 0.2 basis point, and that was reflective consistently from the first quarter going into subsequent months in the second quarter, where it has now dropped to the 11th consecutive time to 6.3%. And this time, one thing that became quite topical during that representation by the government's decision has to do with food and non-food inflation being the key drivers of this inflation driving down trajectory. But one thing he also indicated is that there are some elements within this inflation, that is the food inflation, that are still stubborn and not going up, especially some that has to do with charcoal, which is a very surprising factor. We saw some of herrings, which is also surprising, plantain, amani, all of them, plantain, because herring, that is the smoked herring, plantain, and also even fufu was in the basket. So interesting enough, tell you that food prices, food products are easing in terms of drop. Nonetheless, if you go to the market, the prices are still not reflective in terms of the drop. But the pace of increase has been limited for the 11th consecutive time this year, but it appears that the price element is still a key consideration for businesses.
For many of us, inflation is not just about the price of goods and services or the basket of the weighted average of the price of goods and services, but also how it can even drive economic growth. Because just like you see, 6.3%, it reminds me of the growth rate in the second quarter of the year, which was also around 6%. So currently, our inflation rate is still around the growth rate that we are enjoying currently. But to drop from 54% inflation in about 2 or 3 years ago to now a single digit of 6.3%. I mean, I'm sure there were a lot of questions being asked the government statistician how we were able to get here and what really happened for us to be recording very, very low single digits inflation, Wednesday.
Quite true. He indicated that there was a pass-through effect of the appreciation of the Ghana cedi against the US dollar. And that reflected, if you look at the component, imported inflation has reduced. Inflation on locally produced items has reduced. The goods import, inflation of just goods imported alone has also reduced. So it tells you that the cedi dynamics is playing a key role. We've seen the central bank bring in policy intervention in the market, and this has created some form of market optimism. So the real prospect of anticipation has reduced, because initially we used to have days that we couldn't tell where the currency was going to head because there was no much transparency in the operation of the central bank. All you saw was declarations. But since the beginning of the year, anytime there's going to be a meeting of policy or the intervention, you keep hearing the central bank governor indicating the action before they happen. For instance, he indicated that there's going to be a FX framework intervention, which they started a few months ago, and that intervention is telling us how the central bank intends to intervene into the market, and that has been one key indicator that was reflective in just 2 months ago when we saw the appreciation of the cedi increase by 32% in a short period of time because of the huge central bank intervention. And so these are positive outlook that we are seeing in the last quarter of this year.
In fact, this figure you see on the smart wall is an indicative figure, especially if you are looking at the conversation around policy rates, or if you want to see where policy rates will be, you first of all have to look at where inflation is. And this year alone, we've enjoyed about 1,000 basis point cuts in monetary policy rate in terms of the cuts this year alone. We've had just one hike, around 100 basis points at the beginning. There was some, cuts. We had one hike, and then we had some maintenance, and then we've also had the big rate cut, 300 basis points, 350, and another 350 in the latest one that the Bank of Ghana actually announced. If you look at even our peers, Winston, in West Africa, it looks like this year, Bank of Ghana is the only central bank with that kind of fiscal or monetary muscle to say that I am cutting, policy rates by 1,000 basis points. But many have also made the point that, well, if you had your inflation rising as high as 54% and you hiked rate to a point where it was even around 30%, it is only imperative that, or it's only fair that when inflation is dropping to single digits, you should see policy rates also falling as fast as that. But the big concern here is that if you reduce the policy rate, you are basically telling the market that, well, we sense that liquidity is not enough in the system, because at the moment your inflation around 6.3%. If you are cutting policy rate, it means you want to do some form of indirect injection in terms of injecting liquidity into the market. And by this way, you are enabling the banks to now, look at this policy rate and saying that, well, then we need to either also drop our reference rates. And by doing so, the private individual in the economy, businesses can now go to the commercial banks and borrow at a very favorable rate relative to what we've been seeing in the last 3 years. Now, the big question is, although we may see inflation coming down to 6.3%, policy rate also going down, could this be a clear indication that the next window of monetary policy rate announcement, we could see another 350 basis points rate cut? Because 18%, 300 for the first one and another 350 for this current one that the governor actually announced. The expectation is that, and the governor even mentioned that, if you look at the international outlook, it looks favorable for us at the moment. Domestic-wise, we've been able to consolidate. Inflation is tanking. It was one key, determinant of the 350 basis point rate cut. Now you are seeing inflation move from 8.1% to about 6.3% now. Is that also going to warrant another big rate cut? And how are banks going to follow when Bank of Ghana decides to cut the rate again?
Somewhere in February this year, I was at an event when I was listening to the governor, and he indicated that it is his prayer that we get to a point where interest rate is around 10%.
Oh, wow.
So that's his price. That is it before I finish my...
that means you need about 800 basis points more.
Basically. And if you read the last minute during the policy rate review decision, most of them, about few of them gave about 450 basis points. That is in the last meeting. About 3 gave about 350 basis points, with some indicating about, so basically the target is somewhere between 17 and 18 basis point projection. But some are also optimistic.
The rates, right?
The rates, basically. Some are quite optimistic that in the first quarter of 2026, that is the first meeting of the Central Bank Governor, the MPC meeting, there's likely to be about 350 basis point further rate downwards. And these are based on, first of all, the cedi appreciation. If you look at our reserves now around above $11 billion, 4.8 month import cover, all these indicators give us a favorable trajectory. If you look at the beginning of the year, now I'm getting to understand the strategy. if you look at the beginning of the year, the central bank governor, or let's say central bank, decided to be strong on compliance and policy regulations.
Exactly.
So you keep hearing dollarization, you keep hearing you can't send this amount of money out of our domain because this is our regulations by the central bank. There are new meetings with the business community. There are constant meetings with head of CSOs. So all these are to bring in some form of consultation with key players in the industry so that when policy directions are being enforced, these businesses, individuals, or stakeholders have the clarity of the direction where the central bank is headed. Because if the central bank is deciding to go on its path without bringing the economy along, that growth that we are seeing certainly may not be reflective of what we are seeing on the ground. But now you keep hearing businesses say that we are accepting how the CD is appreciating because they see the overall picture. You keep seeing, if you look at the reports in terms of the business confidence, that was very high. Yeah. All of them coming into play. So, and now it looks as if Ghana is putting its feet forward, because if you look at West Africa, basically Nigeria, Cote d'Ivoire, Benin, all of them, in terms of oil outlook, we are not quite attractive. So we keep seeing investment moving out. If you look at ease of doing business, we weren't quite attractive. The recent cases tells us that if we don't put our foot down and put our economy in order, we end up losing huge amounts of foreign direct investment, which basically in this first year under this government has been the key contributor of boosting the economy going forward.
So, I mean, with this rate, essentially, you will now be expecting that if there's any other, rate cuts, will banks be able to say that they are lending to, customers at a rate of about, let's say, 18%, or let's say even 70% or 15%, because there are still certain risks that are in the horizon, right, where non-performing loan ratio, although we've seen some marginal decline, is still very, very high if you compare Ghana to our peers, right? And the expectation that this is an economy that goes through a lot of roller coasters, right? So you may have a series of, stability, but you don't know when the next hit will come. But this government, or if you listen to the governor in terms of his forward-looking, guidance that he gives in terms of where he thinks that the economy will be, it paints a very positive picture about the economy, saying that, well, we have almost everything under control. Especially the biggest shocks used to come from, at the forex side, the balance of payment issues, where we had significant issues, and as a result of that, we needed to go to the IMF, we couldn't pay our debts and all of that. But with the coming on board of Gold Board, for instance, remittances, you spoke about FDI and all of that, this is really giving the government a significant boost. And even looking at the reserve position, where they were expected to add a second component to the reserve, they were doing way above that. With that kind of, assurance, government thinks that, well, we are in a very, very good position to, first of all, afford ourselves some rate cuts, to put the economy in a situation where interest rates in terms of lending rates, or in terms of average lending rates, should be low for people to be able to get capital to start business. Because the big concern has to do with the 24-hour economy, where, it's going to be private sector led.
Yes.
If it's going to be private sector led, you need the policy rate to come down. You need average lending rate to come down for people to be able to get loans. Because even with average lending rate of about 20% or 90% or 21%, it's still very, very high if we compare ourselves to our peers. And so the big question is, if the Bank of Ghana, looking at this assurance that we are getting from inflation, decide to do another 300 basis points rate cuts, and targeting what you mentioned about 10% policy rate, or even average lending rate of about 10%, do you think that the banks, the financial institutions, will have that kind of, free space, and in terms of assurance that this stability is going to continue for a long time, and so if they decide to follow the train, they wouldn't derail?
Because of the nature of our work, we get the privilege of going to a lot of AGMs, annual general meetings, and you keep hearing reports from banks attesting to the fact that they anticipate the shocks that may come, and most of the shocks, they look at the global outlook, the U.S. economy, China, they look at Russia, Ukraine, all these dynamics come into play, and they are quite careful about the market they invest in. Most of them decide to go into international market, the U.S. trade, all of them, they try to diversify their risk portfolio in order to protect the interests of not just their shareholders, but most people who keep their deposit with them. Unlike some, but it appears these banks, most of those who have leverage with international outlook are quite in a strong footing compared to just the domestic ones. But surprisingly, what I've observed is that the rural banks are doing awesomely great.
Because the rural banks have found a way to tap into the 80% market that most of the commercial banks are not able to do.
Absolutely.
The
rural banks are performing amazingly great. And one thing that is quite shocking, because they are not loud, you may presume they are not really doing the work, but they get close up.
And the microfinance.
Exactly. The NPL rate, the non-performing loan rate in the rural bank is very low. That's surprisingly, because they deal directly with the market women. Day by day, they are always with them. And that gives the economy a boost from the grounds up. But going forward, I believe the central bank will have a lot of work to do, ensuring that the shocks may not be too much, and this will give a foothold for them to move forward.
But once we are talking about inflation coming down, monetary policy rate also following, there is one big elephant in the room which has to do with electricity tariffs, right? We had the information that from PRC that, for instance, if you look at the proposal that ECG was looking for in terms of their service charge, they were looking at some 280%, or Ghana Water Company, 280% increment in the tariff. We understand based on what the PRC actually announced, they just got about some 15.92%. If you look at ECG, on the other hand, they were looking for 225% increase in the tariff. We simply don't know the decision that has been taken on NETCO, GRIDCO, and VRA. But what we know so far is that expect your power, the cost of power, to go up in terms of electricity by some 9.86%, and in terms of water by some 15.92%. Although we are seeing this significant improvement in the economy, would you say that this could possibly set the economy back a bit in terms of the inflation trajectory we are seeing? Because if you look at businesses, the PPI and the CPI, for instance, all will draw significant weight from how tariffs will perform in the economy. And I'm looking at what the the utilities companies propose and what they got. Do you think that it's fair enough that ECG proposed some 225% and they only got about 9.82% or 86%, and Ghana Water Company also getting way below what they requested? Is it the case that PRC is telling them, look, the economy is still heated. If you really want to pay for the things you are looking for, go and address your inefficiencies?
Subject to the release that PRC gave out yesterday, it appeared that this is part of their structural review that they do every 3 to 5 years, and this is to ensure that particular review takes into consideration their capital expenditure and their operational expenditure. And with that dynamics, they're able to give a holistic outlook of how the sector is behaving. That being considered, and they believe that will be a foundation on going forward in terms of their cost arrangement and tariff arrangement. That is separate from the quarterly,
the general tariff quarterly announcement we've been seeing.
Certainly next year, first quarter,
you should expect
more increments.
Because already this year we have seen 3 times increments in electricity tariff. There was some 14.7%, there was about 2.5%, and there was also 1.14% in electricity tariffs alone, more than 17%. If you add this particular one, we are hovering around more than 20 or 25%. In electricity tariffs alone. Talking about even the major tariff adjustment, we've been observing, or we've been tracking the last 4 so far. When we had one in 2018,
the blue is the water and the red is
electricity. When we had one in 2018, the utility companies actually went to PRC, made all the proposals, made all the point, they subjected it to some reviews and all of that, and decided that, look, this year, in 2018, going forward, we are not going to give you any form of increase, but rather there was a decrease in their tariff around that time by 17.5%. And I asked myself, what was happening in 2018 that for a major tariff adjustment, which usually will last between 3 to 5 years, PRC got that kind of muscle to say that we are giving you a drop rather than a request? because it was around the same time, Winston, remember that we were recording, single-digit inflation, 2018, 2019.
All
right?
the numbers were favorable.
All the numbers were very favorable. Fuel prices were very favorable, exchange rate situation very favorable, inflation very favorable. And based on that, the outlook for the medium term, according to PRC around that time, was that there was going to be some form of stability. Mm-hmm. So the economy needed some form of relief, and so take a cut rather than, an addition. Yeah. And we saw that in 2018. 2020, COVID era, there was another major, tariff adjustment, and we saw that it was reverted to 11.17% for electricity and 8% for water.
Yes.
And in 2022, we saw the same thing.
Don't forget, we had free goodies.
It was after the free goodies
after free goodies that they told us that nothing is free in economics, that we have to pay.
2 years after we saw this. And in fact, if you're looking at the last 4 major tariff adjustments since 2018, the one that happened in 2022 is actually the highest.
Yes.
If you are comparing what we are having in 2025 to what we had in 2022, should tell you that this was indeed our crisis year. Mm-hmm. And possibly we can boldly say that after the restructuring and all the haircuts and all the injections, we can now reduce that major tariff adjustment we got in 2022 to now about 9.86% for electricity and about 15.92% for water. But the big question is, are we likely to see, PRC saying that, well, let the general tariff stay the same in the first quarter of 2022, especially looking at the fact that inflation is down, the exchange rate fairly stable, the economy looks like it's going towards a very, very positive trajectory. So once we are giving you this major tariff adjustment, which is definitely what is coming into your pocket as utilities companies, maybe are we likely to see PRC saying that, well, general tariffs stay the same or stay still in the first quarter of 2026?
Don't forget, for the first time, we had the finance minister declare profit for ECG.
Exactly.
That was a very interesting. We were shocked because we've consistently been going through the.
You mean the revenue increases for ECG? Yeah.
Yes, and we are hoping to see the end year report, which will bring our viewers to, especially because they've now gone back to the price waterfall mechanism that has been operationalized. So we've not had any outtake from the independent power producers. We've not had any, let's say, sector shakeups coming up. But this increment is not something any Ghanaian will expect, because they say you can't bring your inefficiency as a burden on the ordinary consumer, because you have to handle the operational efficiency. Unlike most of the conversation that has to do with bringing private sector players on the distribution aspect. We want to see how it will roll up into next year. Basically, who are the key players and how transparent are the bidding going to be, and also Ghanaians and investors that are not just domestic are looking at how any sector are going to play. Because don't forget, the IMF has said that one of the key risks of our economy is the debt that is in the energy sector, because it is constant. We've already locked in with contracts. So no matter whether we pay or we don't pay, those debts will keep accumulating. Take or pay. So there's the need for us to look strongly on those contracts and review it to ensure that we get value for money.
But it's interesting how always, if you look at the major tariffs adjustment, the Ghana Water Company used to get, ECG used to get more than Ghana Water Company. But this year we are seeing the story change.
Yes.
And the big factor has to do with illegal mining, where Ghana Water Company had gone on record to say that no 285% increase in tariff, the company was likely to shut down.
This week, one of the
plants
has
and already in the proposal they sent to PRC, about 9 of their plants had been shut down, and they were finding it difficult, and we saw their operational costs and maintenance costs for 2026 and beyond. And I was like, how is Ghana Water Limited going to cater for that? And it's no surprise that when PRC decided that this year we are awarding the medium-term tariff or the major tariff adjustment, they decided let's focus on Ghana Water Company. But how long as a country will we continue to pay for the inefficiencies or for the risk being posed at Ghana Water Limited as a result of our own negligence for the fight against illegal mining or galamsey? Winston?
The 24-hour economy that the government is proposing will be at a maximum threat at the risks if these two companies are not functional enough, especially the Ghana Water Company and the ECG. Because of where we're heading as a country, if we want to have proper roads, they need this water. Food is very important. Now, if you go to the market, and I had a researcher telling me that now the fishes have elements of chemicals in them because of illegal mining. And these are not just something that is far off. They are closer to us than we think. These water sources are now being basically destroyed, and there is the need for us to consider it. We look at it again as a major threat to not just economy, but to even everyone, basically.
So it's interesting how, if you look at the conversation around utilities and even ECG, for instance, this is what the finance minister had to say. And he's been supporting the fact that, I mean, you need the tariffs, right?
Yes.
But the tariffs must be reasonable. That's why, of course, ECG will propose 225% increase in electricity tariff, but it will get about 9%. Ghana Water Company, 280%, got about 15.86%. But the big question, or what we've discussed so far today, is the fact that, I mean, we are seeing inflation come down or in single digits. Policy rate is also tanking. But if you come into the economy, the only unfortunate news currently is the fact that electricity tariffs or general tariffs are going up, and the expectation is that maybe we are likely to see another tariff, adjustment. We will definitely see that in the first quarter of 2026. But how will it go, and how is this going to affect our inflation trajectory that we are on at the moment, and even government major or flagship programs like the 24-hour economy, which is definitely going to focus on energy and water. But government says that if you sign on to the 24-hour economy, there will definitely be incentives for you. How is it going to roll out in 2026? We simply are looking for answers to that. But this has been Beyond the Numbers with me, Isaac Ofieje. I always do this with
Winston Taki. See you same time next week, and also on Friday, 5:30 p.m. We'll be live here on the Joy News channel. Have a good business day. Bye-bye.